Uh, Evening, everyone.
Good evening.
Good evening.
Sorry for being like right on time. Um, Good to know. I was just finishing up a meeting that started at 4 o'clock with 8 other of our business faculty, and we were all just meeting and sharing what's working well in our respective classrooms so that we can continue to learn from each other. And I tell you that because I want you to know that all of my colleagues across the business department are working extremely hard to work on the transition. So just wanted you guys to know that my colleagues are working hard for you. So how's everybody feeling?
So can you make me a presentation?
Good.
Good. You can go on mute if you don't want everyone to hear the screaming babies in the background. Unfortunately, we'll have to hear my screaming babies because I have to do all the talking. So let's get into it, man. This is part 4 of budgeting. Okay. So I did want to just take a brief second and talk to you all about the importance of budgeting, not from a professional, a corporate perspective, but from a personal perspective. So what you're seeing here is what I call my millionaire pyramid. How many of you can put the thumbs up with the reaction, would like to become a millionaire? Just go into reactions and click the thumbs up. I'm seeing a couple thumbs. Oh, I'm seeing, yeah, excellent. Yeah, good. This is how you do it. This is what I call the millionaire pyramid. And you can see here, it starts with your personal balance sheet, knowing your own individual net worth, and also defining what's important to you. What are your goals? What do you want to accomplish and why you want to accomplish it? The next thing, and I think you have to do these things in order, is budgeting and learning how to discipline yourself to create a budget on a monthly basis, not to give yourself restrictions, but so that you can start to take control of your money. Your money is going to do whatever you tell it to do. But the problem is, too many of us don't tell our money what to do, and so our money ends up just going places, and we get to the end of the month, and we're not sure exactly what happened to that money. After you budget, it's important that we put away some savings, right? Saving for times like this, when there's uncertainty around who's going to have a job, how long will someone be off from work. We want to have that peace of mind that we can, we have enough savings to cover any emergencies that come up. After we have our savings, this is how you become a millionaire. After you have your savings, you want to make sure that you have your debt under control, right? So you really want to do your best to get out of debt. The problem with debt is that when you owe somebody something, anytime you make money, you have to give a portion of that money to them, right? And so I owe on this house that I live in, which means every time I make money, I've got to set aside enough money to pay the bank so that I can continue to have a place to live. Not so much a bad thing. But imagine if I owed money on my credit card because I went out and bought a new Star Wars thing a year ago for $4,000 and I'm still paying it off, right? And so now, years later, I'm still dealing with that debt, that decision that I made years ago, which brought me a lot of joy in the moment, but it's not bringing me joy or as much joy 4 years from now. So we have to get our debt under control. Finally, once you have your debt under control, then you want to start investing, making smart, consistent investment decisions. I know you guys are thinking, man, this is too easy, but this is how statistically most millionaires become a millionaire, the way they reach that status. All the while, we're thinking about how do we continue to increase our income, right? So I think I asked that question in this class, or maybe it was in a different class. But while we're in this moment of sheltering in place, what ideas are we circulating independently? What are we doing to better prepare ourselves so that when this is over, because it will be over, that we'll be in a position to demand more money, to be more efficient and more proficient in a certain skill. I believe in being a generous giver. I think the more that you put out into the world, the more that comes to you. So all the while, when I'm building up through this investment or through this pyramid, I'm making sure I'm continuing to give generously, not only of my money, but of my time and all my other resources. And then finally, making sure that you're connecting with the right partner. And I mean connecting with the right partner, meaning your spouse, your boyfriend, your girlfriend, your life partner, your children, making sure your children have a strong financial literacy so that they can make good decisions, and also connecting spiritually to make sure that it all stays, so that everything kind of works together. And that is how you become a millionaire. I share that because we're talking about budgeting, and you can see budgeting is such a huge part of achieving that millionaire status. Who would like to learn more about this? Just one person. Oh man, thumbs up. Okay, I see the thumbs. All right. Bam. Hey, this fall schedule's out. Now look, I was in another meeting at like 2:30, and they don't know if they think we're gonna be back on campus, but they're like, just in case we're not on campus, what is it gonna look like? But I'm telling you, we will be having classes in the fall. The fall schedule is out. I will be teaching this class in the fall, Mondays, Wednesdays, 12:30 to 1:45. Let me tell you, this class is transferable. And check with your counselor. I believe it's transferable as a quantitative, like a math-ish type class. So, I mean, it's not going to get you into like, you know, the UC Berkeley's and the blah, blah, blahs, but I mean, hey. Questions?
Is that the fall schedule, is that all online, or are they planning to do in person?
Right now, our plan is to have fall classes in person, but we're also preparing for a contingency in case we have to, you know, we still have some level of physical distancing requirements in place, what it could look like. But right now, the schedule's out, assuming we will be having class.
What about the summer? Do you teach in the summer?
I will not be teaching this summer.
And the summer is planned to be all online, or is the summer also in person?
This summer is going to be all online classes.
Oh, wow. Okay. Good to know.
Is that for certain?
I believe it's as certain as I understand it, yes.
Okay.
Other questions?
Where can you find the class catalog, the class schedule?
If you go to the Los Positas website, and you should see schedule of classes for the fall 2020. In the summer 2020. All right, so we're going to get back into our groups, and we are going to finish working on 3 different budgets. And the 3 budgets we're going to cover today are the cash collection budget, the cash payment budget, and the combined cash budget. Okay. Remember, all these budgets are still feeding one off of the other. So looking at the chat, if you're not in a group, I will add you when we do our we go to our groups. So all these budgets are feeding off each other. So that's why it's really important that if your group has not gotten to the gotten through the budgeted income statement, that as soon as we break out into groups, you all should invite me into your group so that we can get you to that point so that you can move on to the other budgets. Oh yeah, we can't do this live. I find that to be such a funny slide, but I've gotten 0 reaction 3 out of 3 times. All right, we are recording, so here we go. These are the groups. If your name's not up here, then after I've gotten everyone assigned, I will put you into one of the 4 groups. The cash collection budget. So up until this point, right, we've been putting together, all the budgets have been working toward our budgeted income statement so that we can tell our investors and our creditors and tell ourselves, management, what we expect to earn in income. But for those of you that have taken class with me before, and actually those of you that were in the class at the beginning, all of you, we talked about the statement of cash flow. We know that cash rules everything around me. Cream, get the money, dollar bills, y'all. So management also wants to know what's happening with our flow of cash, right? It's nice to know that at the end of the month, I'm going to get another paycheck, right? But how am I going to manage that until I get paid the next following month, right? So what's the timing of the cash coming in? And then what are the payments that I have to make so that I can make sure that I don't run out of cash? Or if I need to borrow money in order to fill a gap, I'm aware of that. So that's really what this is looking at. So same company, Tucson Tortillas, right? Same time period, January, February, March, and for the quarter. And then you can see that this company, and this goes back to, I think, I forgot your name. I'm going to find it. You're asking a question about cash collections and unpaid cash. All right, Tram. Sorry, Tram was asking that question on Monday. So in order to do this, the first thing we need to know is what is our sales in dollars. Okay. So where are we going to get that information from?
Would it be the sales budget because it has the sales revenue?
Exactly, right? So we already know our sales in dollars. Right. And again, you don't want to copy it in your Excel file and then paste it. You want to set it up in a formula where you say this cell, B6, right here, for, well, it's not actually not even up here. Oh yeah. This cell matches to the cell of the sales budget. Okay. And then here, this company is saying part of our sales are in cash, the other is in accounts receivable, right? So there's a portion of the sales that are going to come immediately from January, and then the rest of it is going to come on accounts, right? And so then you have to, let me pause right there. So if we go back to the sales budget, you would see that this was showing you 120,000 was going to be collected in cash. The remaining portion was sales on account, in accounts receivable. Once we make a sale on account, now we have to estimate when do we expect the customer to pay us. So you can see here, this company is saying for all the sales that we make on account, 85% of those will be collected in the following month. Meaning that if we make, we have sales in January on account, 85% of those sales will be collected in February. And then it's saying 14% of those January sales will be collected in March, 2 days later. Now, 85 plus 14 equals 99. What happened to the other 1%?
That
Bad debt.
Thank you. That was our estimate of what we're not going to collect. So even when we set this up initially, we were expecting that 1% of it would not be collected. Okay. Questions? Kind of went too fast. So we need our sales in dollars. We also need to know of our total sales, what percentage is cash, what percentage is accounts receivable, sold on account. We need to know what percentage do we expect to collect within that month, and what percentage are we going to collect in subsequent months, and what percentage are we not going to collect. We call that our budgeted cash receipts. How much cash do we expect to receive? Do we expect to receive? Let's see, what questions do you have?
How do you find like the percentage of cash sales?
We have to, like, you mean in real life?
I mean, just like
Or-
compared to like this problem, like they give us like the percentages of credit that are collected. But I mean, you're automatically collecting all your cash sales because it's cash.
Right, so we got that number from all the way up here. Keep going. Here. So this was total sales, 600,000.
It's
You
black.
guys see this?
no, I can't see anything.
Oh. Let's see. Can you not see what's on my screen?
No, it's still black.
All right, let me figure out how to. There we go.
I was gonna say maybe unshare and then reshare your screen.
All right,
Uh,
now can you see what's on my screen?
not really. Like you can see like partially, yeah.
Partial. Can you see now?
There we go.
Yeah, it works.
Slides,
All
yeah.
right. So this was our sales budget, and the sales budget showed 600,000. And then they said of the 600, 20% is cash, 80% is credit. So this is where they're pulling that 120,000, 80, 100. And then those, that's where we're pulling that information from. And then for the amount of cash that's being collected in February and March for this number, they're pulling it from here.
I see.
let's do an example. Or are there other questions before we get to our example? All right, let's do our example. Emerald Service anticipates the following sales revenue over a 5-month period. And if you bear with me, I'm gonna move this over to my iPad so we can do some drawing. Here. All right, so over the next 5-month period, they expect to have this much in sales revenue. 20% is cash, 80% is credit. Okay. And their history tells them that they're going to get 30% in the month of the sale, 60% in the month after the sale, and 6% 2 months after the sale. 4% will not be collected. And the question is, how much cash will be collected in January, February, March, and for the quarter? So let's start with January and figure out how much cash is going to be collected. So 20% of January sales will be collected in cash. So 20% of 15,500.
$3,100.
Thank you. 3,100. Which means that the other 80% was collected on account, right? So I'm just gonna maybe put something up here. January AR is 15,500 times 0.80. So 12,400 was on account. So it's telling me 30% of what we sold in January account will be collected in January. So I guess I'll call it same month. I don't really know what to call it, but 30% of that would be collected. So that means 3,720. Okay, I'm taking 30% of this number, right? Because that's what's going to be collected in the month. It's going to be collected in January. Questions? Then when I get to February, right, another 60% is going to be collected of this. So I multiply this by 60%. So 12,400 times 0.6, 7,440 of this amount here will be collected in.
So wouldn't that be like a new category, like the month after?
Oh yeah, you're right. Yep.
I just wanted to double check.
Thank you. I don't know how to delete all this thing, so you guys bear with me. Okay. Do a bunch of undos. So next month, thank you, Melissa. Oh joy, he's froze up on me. There we go. He's back. All right, so February, next month, we would collect $7,440 in cash in February for January's sales. And then we're going to collect another 6% 2 months later. And multiply this by 6%, 12,400 times 0.06. In the month of March, oh geez. In the month of March, we would collect, as I call it, third month. We're going to collect an additional 744. What questions do you have?
Do we do that same process for January, February, and March? So
We
for
would, yes.
February, we start at 12,000 minus 20%, minus 30, minus 60, minus 6, minus 4, so on and so on.
Yes, I wouldn't call it minus, but yeah, we take 12,000, 20% of 12,000. 20% of 12,000 is 2,400. That's the amount of cash we're going to collect in the month. But that's the amount of cash sales we'll have in the month of February. And then the remainder, 2,400, 80% of 12,000 is on account, 9,600, of which 30% will be collected in February, 60% will be collected in March. And if we're doing this for a company, we'd also say that 6% will be collected in April. But since we're only going through March, we don't even really need to worry about April right now. Does that make sense?
I have a question.
Yes.
Yeah, in that sense, then we can also collect the money from December, account receivable in December.
Yes, we will. I was working forward and then I was going to work backwards.
Yeah.
But yes. So if I take 30% of 9,600, that means I'm collecting 2,880 in February from February sales. And then in March, I'm going to collect 60% of 9,600, which is another 5,000. 5,760. And then I'll collect some more money in April. And then for the month of March, right, 20% is what we collect in cash sales. So if anybody has that number, spit it out.
2,800.
2,800, thank you. And then that means if we sold $14,000, 80% of it was on account. So in the month of March, we sold 11,200 in March, of which 30% we collected in March, and then 60 in April, 6 in May. Okay. So 30% of 11,200 is 33,600. So we can start adding all this down, right? Which would tell us that in the month of March, we're going to collect. Anyone has that number? Spit it out.
$12,664.
That is what I got. Okay. So for February, before we add down, well, let's go back to January. So me said in November, right? 80% of this was on account. So 80% of 16,500 times 0.8 is 13,200, of which 30% was collected in November, 60% in December, and 6% in January. Right, so if we take 6% of 13,200, guys, please let me know if I'm going too fast. I get the sense some of you are already done. $792, right? That's 6% of 13,200 was collected in January from the November sales. In December, 10,500, 80% of that number was on account, so 8,400. 30% of that was collected in December, 60% in January, and 6% in February. So in January, we got 60% of this 8,400, which is 5,040. And then in February, we got 6% of this 8,400, which is 504. And then we add down, and then we add across for the quarter. And then that would be our total. Looks like that. Questions?
Are we going to be doing this for the same activity we've been working with, the bicycles and tricycles?
Yes, we will. Yes, we will. Are there any questions about how we get to this number?
So for the quarter, everything just like moves over and like adds the cross.
Yes.
Okay. That's all.
Okay. So I will now start to put you all into your groups. And you all know this is going to take a little bit of time. I've opened up the module. If you go to Canvas, you will see cash collection budget. And I'm going to start putting you back into your groups. So stop video. You don't have to watch my scariness. If you want, I can sing you some songs while doing this.
Yeah, sing us a song.
I was hoping no one would ask for that.
All right, what's the first one on the list?
I will tell you that my mom and I are planning to do Facebook Live on Sunday. We're going to sing a duet.
Nice.
I'll be on the guitar. We're going to be singing a duet.
Oh yeah, now you play the guitar. You did that for the fifth grade.
Oh yeah, I was just messing with y'all.
That was cool. I was like, oh,
Oh, thank you. All right, so some of you have groups. And so once you get assigned to your groups, you can go into your room and get started. I guess actually you can get started now, right? You guys are on. To bugs. Any questions?
I'm still just trying to figure it out. I mean, I understand the concept, but I'm looking at your examples and I'm trying to figure out how you got the numbers. Like for
Okay.
looking at your answer, your cash collection budget, the final, you started off with 15,500 for January, and then you took 20% of that, which gave you 3,100, and then you subtracted that from the 15,500 and got 12,400, and then you took 30% of that and got
Yes.
2,880, or no?
So
Seven. Oh.
this was the amount collected on account. And of this amount, 30% was collected in January.
So you subtract
60% of the same number was collected here. So this is 60% times 12,400. And then this is 6% times 12,400.
Okay. So
This is
you're not subtracting these amounts from the 12,400?
correct. We're not subtracting those amounts.
But we did subtract it the first time from the cash sales. Are we just trying to figure out what the credit sales were? So we subtracted the 20. Okay, so we could have done like 80% of we could have just instead of doing cash sales 20% of sales, we could have done credit sales 80% and started off with 12,400.
Yes.
And then just
12,400. Yeah. 12,400 is 80% of this number.
okay.
That's what AR. And then of this AR, in this example, 30% is collected, then 60, then 6.
So in our examples, we're not taking out 20% for the cash sales. We're just using the full amount. So we'll take the full amount for January, times that by 30%, and then we'll times the same number by 70%. Oh, it's different for everybody, but for our group.
Yeah.
That makes
so
sense.
The amount of sales, yeah, it does. So the amount of sales that you collect, the amount of cash you collect in February is going to include 70% of January sales.
Okay.
Professor Bell.
Yes.
So how could we check our answers? Like we couldn't check our answers for the last budget we did, budgeted income statement, and for this one too.
When we go out back to our breakout session, call me in first thing, and I'll check your answers.
Okay.
I have all the answers. All right, so let's talk about cash payments, right? Money comes in and money goes out. So here what we're doing is we're taking all of the cash payments that we have to make in that month, right? So to do that, we need to know what's our total direct material cost, right? Because we're making cash payments for direct materials. Where are we going to find that information?
Direct materials budget.
Thank you. On the direct materials budget. Now there's a bit of a nuance here because when we purchase our inventory, we're going to debit inventory, credit accounts payable. Right? We don't pay for it immediately. So the question becomes, what percent of this of our total cost are we paying in the current month? And then what percent are we paying the next month? Okay. For direct labor, we also need to know our direct labor, and where is that going to come from?
Direct labor budget.
Yes. Now, generally speaking, we're going to pay what we owe every month, right? There may be some lag or accruing things, but for simplicity's sake, whatever we owe, we pay in that month. We also need to look at our payments for manufacturing overhead. Where are we going to find that?
Manufacturing overhead budget.
You see how all this is coming together? But here's a caveat, right? And Sumi brought this up on Monday. Some things on our manufacturing overhead budget do not involve cash, right? Namely, specifically depreciation. Okay. So when we're going to our manufacturing overhead budget, we are subtracting depreciation and any other non-cash expenses that are on that budget. That's not going to actually cost us cash. Questions? To the extent that there's a portion of our overhead costs which we're putting on accounts, right? We take whatever percent we're paying this month, and the rest we pay off in the following month. We also have our operating expenses. Okay. And where do we find our total operating expenses?
Operating expenses.
Thank you. And again, if there's any non-cash transactions there, right, that would be depreciation. It could also be bad debt. I think that's the one Sumi pointed out. Okay. Because these things do not involve cash, you subtract them from our total operating expense budget. But we're moving them over here to our cash payment budget. The other things that we want to be mindful of is, are we making any, and then percentage paid this month versus next month. Are we making any capital investments? Capital investments are buying new equipment, buying new computers, any asset purchases that we're making. But to the extent that's going to involve cash, we want to make sure we record that here. So you can see your cash payments for capital investments are more sporadic, right? We're doing a lot in January, none in February, none in March. But these will be budgeted items that we want to account for, because we need a new piece of equipment, we need new furniture, or whatever assets we're purchasing.
Professor Bell, won't this be
Yes.
covered under other overhead costs?
No, it would not.
Okay.
So what we're going to see in overhead and in operating expenses are going to be debit depreciation. It's going to be the depreciation expense. That's what we're going to see there. The debit depreciation expense, credit and accumulated depreciation. But remember, the only reason why we're doing this is because we did this. We bought equipment, or we bought a vehicle, or we bought a computer, and we debited cash or accounts payable and then paid it off with cash. This transaction here is what requires us to depreciate the asset over its useful life.
Okay, got it.
So what yeah, what this is talking about is the purchase of the actual equipment. Thank you for asking that question. Then we've got our, so if there's any other costs, right? So dividends would be an example of that down.
Yeah, we can.
Let's see, can you all still hear me?
Yeah, we can hear you.
Yeah, we can.
Telling me to relaunch Zoom. So afraid of this. I'm going to reopen the breakout rooms. If I haven't looked at your income statement or your cash collection budget, just invite me back in there so that I can check it out.
Okay.
All right, but the last two pieces of information are now available on Canvas. And I will be here to answer any questions that you have.